What does the September trading tell us about the state of play so far in your view?
See, the biggest question mark facing the U.S. economy right now is, the labor markets. The health of the economy is not looking that positive, and the numbers in the labor markets are reflecting that. So what's happening is the market's looking at the labor market numbers. It's also looking at, how the Fed is going to behave. And a combination of that, I think, is leading to the markets being slightly, I would say, nervous. So that's pretty much what's happening. Now, the big question mark is, if you look at the market expectations of the rate cuts, it's almost priced at 100 basis point till the year end. And I think that's where there is a contradiction, because if there is a soft landing, then that can't be such an aggressive rate cut. So a moderate soft landing or a soft landing not necessarily means the opposite of that is hard landing. So we think the answer may be somewhere in between. And the markets will show more volatility in the near term. That's what we expect. And probably we have a more weaker view on the market, in spite of the fact that we've seen the rally in the last couple of weeks from its lows. But if you see the rally again, I think the volumes were low. We saw relatively weaker volumes, momentum fade across market, especially in leading stocks. So all in all, I think a little bit of a underweight on the equity markets right now.
Shilpi, what is the Treasury trade telling us right now? We've seen the yield curve steepening, 2s and 10s have flipped, and the inversion has ended. Does it signal the end of some of the macro recessionary angst, or is it the beginning? What's your view?
We believe that the uninversion of the yield curve is not necessarily positive for the market. In fact, I think the markets can fall after the yield curve uninverts. So that's how we are looking at it. I think there are multiple other factors to look at it beyond the rates, but I think the immediate ones are going to be the labor market, because the labor market determines the consumption patterns, and I think the manufacturing is slowing down, which is also leading to the same conclusion that there is nervousness in the market, and I think job data is going to be very critical.